Okay, thanks. I'm going to share my slides here, and Matthew, I will ask if you can see the slides.
Yes.
Okay, great. So my campaign sort of theme is major structural change, not just incremental reform. And today's topic for the Substantive Saturday is tax reform in Washington State. I do have a preparatory slide which talks about how tax reform fits into my overall platform. So we need major structural change, and why is that? We face 5 crises. I talked about this last week. We, of course, have the public health crisis, the pandemic. We have an economic recession, which we're familiar with. We also have the social crisis, and by that I'm referring to the fact that the pandemic and the economic recession disproportionately are impacting lower income and minority groups. We also have a significant pending budget crisis in Olympia, where the state's revenues are coming down dramatically due to less sales tax revenue, but expenses in many areas are going up to deal with the costs of the pandemic. So there's going to need to be budget cuts in Olympia in the upcoming session. And there is, of course, still the climate crisis, which isn't going away. So we have these crises confronting society, and for that reason, we need major structural change, not as I suggest has sort of been the case with our representatives in recent sessions, more of an incremental reform perspective. So I have 4 campaign priorities. The first is to change the way the state conducts its operations to protect public health and to reduce expenditures. There's many ways to go about this, but one such example would be, for example, the schools. It may make sense to go to a blended model where part-time is students are at schools, part-time it's online, and that can both create a healthier environment at schools because of lower densities, but also lower maintenance costs, electricity costs at schools, also busing costs. So it achieves multiple objectives. And there's many things we can do here. I'm not going to go into detail today. This will be the topic of another era, another talk. But the point is, across the board cuts is the wrong approach. And the better approach is to restructure how we conduct our operations. Second, we don't want assistance to be universal. Now's the wrong time for example, universal basic income. It's the right time for targeted programs to people in need. We also need a new source of progressive revenue, and that's in red because that's what I'm going to be talking about today. And finally, we need to address climate change with high impact, low cost programs. We can't afford to spend a lot on those in an environment of scarce resources. So again, a new source of revenue is one of the planks of my platform, and I just wanted to show how that fits into the overall scheme of my campaign. Okay. So we have the agenda, the tax situation in Washington State, options for reform, and summary. Okay, I showed this slide last week, and it will set the stage for the slides that follow. This shows the level of taxation in Washington State on the left. So this is overall the level at which we tax. And this shows how regressive our tax system is. And as I move past this slide, I'll be talking about each of these topics one after the next. So, level of taxation, this bar, this shows the total state and local taxes for residents per $1,000 of personal income. So if we take, one of you, and if your income is $10,000, about 10% of that goes to taxes, a little more for the average in the US and a little less in Washington State. So we tax at a slightly lower level of tax intensity than the average state in the country. We're 30th out of 50. A little bit of a low tax state, but not much. Okay, then we have regressivity, and this shows what's the percent of income paid in taxes by the 20% lowest income individuals. And so in Washington State, it's sort of notable. If you earned $20,000 a year, you pay 18% of that just in state and local taxes. That's $3,600 per year. That's quite significant. As you will see, that's the highest in the country, and the national average is less than 12%. So in terms of regressivity, we're much higher than the national average. So now I'm going to talk about level, then I'm going to talk about regressivity. the first question that we want to answer when we look at this is, has it always been this way? Have we always been sort of a low tax state? And the answer to that is no. So this chart shows the state and local taxes as a percentage of personal income over time. And it compares Washington state to the national average. So on the horizontal axis, we have years, 1990, 91, et cetera, all the way up to 2016, which is the most recent year for which data is available. And here we have on the vertical axis, Washington state relative to the national average. So this is the zero line. This is the index for the national average. So in 1990, think that the average changes, of course, but I just re-index it every year to this zero line. So the red line represents the line that if we were on it, we would be at the national average. But in fact, going back to 1990, we were a higher tax state compared to the national average when measured as total taxes paid by residents as a percentage of their personal income, 8% higher than the national average. And then year by year by year, and 2000 is a significant year, which we'll talk about that later. That's when we start becoming a lower tax intensity state. And now, largely, I believe, due to the fact that other states are cutting taxes, not that we're raising taxes, we're moving up a little bit. But the broader point here is that in 1995, we were the 11th highest state in the country in terms of taxation as a percent of income, and now we're 30th. So this is one of the major notable powerful trends in Washington policy and politics for the last couple decades. And this, of course, means less funding for schools, less funding for transit, less funding for homelessness, et cetera. Okay, so an important trend to be aware of. The next question is, how did this happen? And so that's a very important question. And there's several factors. I'll start actually with the bottom one. We haven't implemented any new taxes. So that's one big factor as to why we're becoming less tax intensive. And there's some other things that have compounded that. We used to be able to raise property taxes 6% per year in each taxing district. But there was an initiative, I-747 in 2001, and you'll recall this is sort of the time when we're really dropping in terms of tax intensity. That limited that to 1% per year. So that sort of tied the hands of the legislature, saying you can only raise revenues by a little bit. This was overturned by the state Supreme Court, but this was during Christine Gregoire's leadership time in Olympia as governor. The legislature decided to take the following approach. Even though the court overturned it on judicial grounds, that doesn't mean we can't institute it, and they decided to institute it legislatively in an attempt to acknowledge the will of the voters. So, so we have these limitations. There have been some adjustments to it, but that's a factor. Tim Eyman, who many of you will know, has also implemented several times initiatives to reduce car tab taxes. Those have gone in effect. They're repealed. There's another one, I-976, which was just passed. That's in the courts being litigated, but that has reduced revenue. And finally, there are a lot of corporate tax breaks that grow each year where specific corporations and manufacturing sectors are given a tax break. Many of you will recall the Boeing tax break. That's by far the largest of these, but there's others. So that's what these factors explain the decrease in tax intensity in Washington state over time. The next slide compares us to other states. And so we have each line bar is one state. So here's Oregon, here's California, here's New York, here's Washington. The blue bar is what percent of taxes, what percent do the lowest 20% of income earning individuals pay in taxes? You'll recall before I said it was about 18%. So that's this blue bar here, 18%. And the red bar is what percent of their income do the top 1% pay in taxes. So, and I arranged them from left to right according to states that have their poorest people pay a high percentage. And as you can see, if we go to Washington state, state has the highest, its low income residents, as I said before, pay the highest percentage of their income in taxes. almost 18%. So if you earn $20,000 in a year, your family, you pay $3,600. This is Delaware. There you'd pay $1,000. So huge difference. And the notable thing, of course, is that we are the worst. We have our poor residents pay the highest percentage of their income in state and local taxes, and it's not even really close. In addition, we have our affluent individuals, top 1%, only pay 3%. That makes us fifth lowest in the country. And if you take this and divide it by this, you get a ratio which is almost 6. That is, our poorest residents pay 5.9 times as much of their income in taxes, state and local taxes, as do our rich, which in my opinion and the opinion of many analysts is very, very concerning. And now we look at 3 other states on the West Coast. Oregon, the rich pay, close to 10%, the poor pay about 10%, sort of equal. New York, or I'm sorry, California, the rich pay the highest percent of any state in the country, and they pay more than the poor. And New York, pretty equal. So we have 3 states right around a ratio of 1, whereas we have a ratio of 6. Our poor pay much more in taxes than the rich. Okay, so next, let's take a look at why that is, okay? So this is taxes paid by type of tax, and it's the 4 states I just looked at: Washington, Oregon, California, New York. So this is the percent paid by the top 1%. This is the percent paid by the bottom 20%. So in other words, I'm breaking down the top bars and breaking down the bottom bars from the prior slide. So let's take New York. The top 1%, pay a little more than 10%, and the bottom 20% pay a little less than that, but pretty equal. California, pretty equal. Oregon, pretty equal. And then there's us, totally out of, totally unequal. And the important thing here, so that's one message. The second is, let's take a look at tax by type of tax. The red bar is the income tax, blue bar property tax, green bar sales tax. And yes, there are other fees and smaller taxes, but these are the big 3. And we see that in New York, the income tax figures very prominently, as it does in California and in Oregon, but we don't have one. So in effect, what the other states are doing is instituting a tax that's inherently progressive, and we don't have it, so we have a low tax on rich people, and then we compensate for that by placing it on, on poor people. And then one final note about taxation: you can see that New York income tax is sort of equal for rich and poor percentage-wise, as are the other taxes. Oregon's is more progressive. The affluent people pay a higher percent and the poor people pay a lower percent. In California, it's sort of very progressive in the sense that poor people get a tax rebate. So it's actually, they get money back, sort of like the federal earned income tax credit, for those of you familiar with that, and the rich pay a lot. But again, the big point, the lack of an income tax leads Washington directly to have a very regressive tax structure. So does that pattern hold nationwide? Yes, it does. There's 9 states in the country without an income tax and capital gains tax. They are Alaska, Florida, Nevada, South Dakota, Texas, Washington, Wyoming, Tennessee, and New Hampshire. And if you look, this is the ratio of the percent paid by poor to the percent paid by rich. Comes directly from this slide. So you'll recall Washington State had a ratio of 5.9. So there's this number here, 5.9. So we have the highest ratio of the poor paying taxes to the rich in the country. And as one, as I've suggested, it's all the states that don't have an income tax that are at the top 9. So we have 1st, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, 9th. Most regressive tax systems in the country are all in the states that don't have an income tax or capital gains tax. So we're an outlier, and like all the other outliers, we tax our poorest residents at a high level, and it's largely due to the lack of an income tax. Okay. Finally, I've combined the 2 measures. So we've talked about the fact that we're a low overall tax state, and we've talked about the fact that we're regressive. So if you put them onto one graph, the horizontal axis is how intensive, how much the level of taxation. So if we move to the left, this is lower tax states, to the right, higher tax states. And on the vertical axis, regressivity. So on the lower part, these are highly regressive states like us. and these are less regressive. So I plotted every state, and I filled in the bubble red if these are states that voted for Trump in 2016, and blue if they didn't vote for Trump, and voted for Clinton. So you'll see the blue states tend to be higher tax as a percent of income, and the red states lower tax. The main point here is, here's Washington State. We're low tax and the most regressive state in the country, so we're just a complete outlier. And if you look at the 4 states that we talked about before, if we wanted to get to Oregon's level, we'd become higher tax, much less regressive. Same with California, same with New York, and even moving just to the median, these are median lines, we would increase our taxes a bit and become much more regressive, which is exactly what income tax would do for us. So an interesting chart to look at later to see where various states reside. The point that I'm trying to make is we are a distinct outlier, okay? We are operating in a very regressive manner, and we claim to be a progressive state. Next
John,
slide.
we have about 5 more minutes.
Okay, thank you, Matthew. So we have a business tax. A lot of people in our state don't know this. It's also regressive. And why is that? Our business tax is based on revenues, not profits. So let's say, for example, that Matthew started a business and he is providing, let's just say, computer services or some such. Most startups aren't profitable for a while. So in most states, 44 states tax corporations on profits. So in most states, Matthew would not pay any state tax until he became profitable. But in Washington, we tax sales, or otherwise known as revenues. So he starts paying taxes right away. So again, we're sort of, relative to other states, penalizing the lower income, less profit making entities. So we call this the B&O tax, business and occupancy. It's regressive. It's also, there's a lot of loopholes, which I talked about before, over 700 tax breaks given within the code, and it's transparent. I'm going to guess that most residents don't know any of the tax breaks except for the Boeing tax break, and there's 700 of them. So people lobby for them and receive tax breaks. Other states, as I said, 44 tax on profits, 4 states tax on revenues, not profits. We're one of them. Texas, Nevada, and Ohio, the others, and 2 states don't tax. So the point is, we have a regressive tax for individuals and a regressive tax for corporations. Comments on taxation, summary comments. So we're an outlier, okay? Our level of taxation is somewhat low, and we have the most regressive tax structure in the nation because we're one of 9 states with an income tax. We are regularly evaluated as having the most unjust tax system in the country, including from the Institute for Taxation and Economic Policy, and our business taxes are regressive. So we desperately need a new source of progressive taxation. I think I have 3 slides left, if I'm not mistaken. So I'm not going to propose one specific option. I favor the income tax. But what I want to do is sort of lay out the options. One set of options for raising taxes involves repealing limitations on existing taxes. So we have a 1% property limit that I talked about. That can be repealed, and parts of it have, but that can be fully repealed, leading to the opportunity for more taxation. We can reduce car tab taxes, and we can repeal many of the tax breaks. So without a new tax, we can make some progress. But in my opinion, and the opinion of many, there's also the opportunity and we should institute a new tax. This could be an income tax on high income earners. That's what I favor. It makes us basically just like other states. And this can be accompanied, I think it was Mariana that brought this up. No, it was Pat brought this up last week, that it doesn't have to be a significant tax increase. We just institute an income tax and then lower the sales tax. So we just transfer the tax burden. There could also be a capital gains. There's 3 issues there. At what point do you start taxing capital gains? Inslee's proposal a couple years ago, Governor Inslee, was you'd start it at the 25,000 plus point. You'd give people an exemption on capital gains for the sale of their first home, and you'd tax capital gains at 9%. The problem right now with capital gains is that it's not a good tax at the time during a time of a recession, because people aren't making a lot of money, of course, on buying and selling stocks and other assets. We could have a wealth tax similar to the Elizabeth Warren proposal, an inheritance tax, financial transaction, carbon tax. The problem with those is it's somewhat challenging to make them progressive. But the point is there's different options. I favor an income tax. I'm sort of reluctant to impose taxes that other states don't have, like a wealth tax, because that can cause people to think about, perhaps not moving here. But whereas if we implement an income tax, almost all the states have that. So that's what I favor. And then finally, we can also, in addition to passing legislation in Olympia, we can go to the ballot like Portland just did, and actually institute a tax through the ballot. That's interesting. We don't have time to talk about that today. I'll talk about it in a next week's lesson on homelessness. So anyway, so there's different options, and the proposal, well, I'll get to a specific proposal in terms of how to go about it conceptually in just a second. There are some issues with an income tax that many of you will be familiar with. So the Washington State Constitution, Article 7, Section 1, all taxes shall be uniform upon the same class of property within the territorial limits of the authority levying the tax. So does this mean that we can't have a graduated income tax? It's been held to that to be the case. This has been amended 16 times. It was repealed during the Depression. Very complicated legal issues, variety of different rulings. I don't pretend to sort all this out. A lot of scholars think that we can institute an income tax, but one thing's for certain, if we do, it will be challenged in court, okay? So legality is an issue. The acceptability to voters. Since 1935, there have been 7 attempts to institute an income tax in Washington State, and they failed every time, including the Bill Gates Sr. Backed initiative in 2010, which was I-1098. That failed with 64% of the people opposed to it. Now, one reason for that is it was a significant tax increase. It didn't call for a significant decrease elsewhere in sales taxes, which is what I would favor. So I think that would increase the odds. But you could also pass this in the legislature, although some will argue it's politically risky. And then some people argue that it's good to have no income tax because that encourages businesses to locate here. I argue that that's really a false rationale, because what you're basically saying is poor people should subsidize rich people so that affluent people will move to the state, and I think that's a highly problematic argument, especially in the age of all-time highs in income inequality. But it's good to be aware of these issues. It's not a simple process to institute a new income tax. For this reason, a lot of people have proposed starting with a capital gains tax, but as I said, that's sort of problematic. So, summary, one slide. We have an abysmal tax structure, abysmal. And it's been known for years, and nothing's been done about it. The person that I'm challenging in this race has been in Olympia 22 years, and this has been the case for the entire time. And I'm, in my view, this just has to be a priority to address. We've now been caught totally unprepared. Now's the exact time, with a funding deficit and expense needs in the form of the pandemic response, that we need revenue and we don't have a source of it. So we're sort of, in a sense, getting caught with our pants down. And so therefore it's imperative to pass a new source of revenue, and it must be progressive. And I'll say this, a lot of people like to position themselves as the person with the answer to how it should be done. I view it as, yes, I have a preference, it's for an income tax, but I'm flexible. The objective shouldn't be for one person to try to convince 60 other legislatures, or 150 if you count, both parties in both chambers, what the right way to do it is. It should be for the Democratic Party to form a consensus on the best approach, and to people fall in line behind that in order to make sure that it passes. So that's the approach I take. We certainly need a tax. It certainly needs to be progressive. It doesn't have to represent a major tax increase, because we can cut the sales tax proportionately. But once those principles are met, I'm reasonably flexible about which approach to use. So great. So those are my thoughts. And it's 11:28. And so Matthew, I'll turn it over to you for just a minute.
All right. If you have any questions, please raise your hand. All right, Brian, go ahead.
Thank you, Matthew. Thank you, John, for your presentation. I thought it was very interesting and enjoyed it. My perspective is from that of a self-employed person. You talked a little bit about the fact that in Washington we tax total revenue as opposed to profit.
For business.
However, that's not entirely accurate. I think that's what you said. I provide a service. I'm a musician, and I don't pay tax on total revenue. What I pay tax on is things which I purchase from out of the state, which I didn't pay sales tax on. And one thing I do like about the tax system, at least as it applies to me in Washington state, specifically with regards to my activities as a self-employed person, is that it's very simple. I can go on the WDOR, Department of Revenue's website and complete my return very quickly or easily or with minimal assistance from someone in their office, and then pay that small fee. With our federal income tax system, because it's so complicated, I have to hire an accountant, and I have to pay, I think the rate is $450 an hour. He usually reduces it to about $320 for me, even though it only takes him about an hour to do it, which I think is a very high fee. And although it's paid to a private business, I see it as a tax because there's no way for me to work my way through such a complex system. And I really don't think it's right that they've created a system which is so complicated that I can't figure it out myself without risking making a mistake, having to do an amended return, and or get audited. And I really tend to be opposed to a proposal for creating an income tax system in Washington or some new form of business tax where it's going to be so complicated I'm going to have to pay my accountant, even if I have a minimal tax burden. I have to pay that fee. So to me, that's a cost, and
Okay.
I tend to oppose having to do that. So I was curious what your thoughts were on that.
Yeah, so first of all, businesses do pay on based on revenues. Now, it may be that you, as an at a certain size and a certain type of filing status, that then changes, which is what I suspect. I haven't looked into that, but so I think what I'm just going to say about that is I thank you for your perspective. I think it's a valid perspective. Maybe there's a way to keep the simplicity in place up to a certain level of, revenues, and then have it transition to a something where, there's more to fill out. But I'm just going to say thank you for your perspective and leave it at that for now. So.
All right, John, we have several questions in the group chat. Would you like?
Yeah, go ahead and just read. Maybe I'll handle one or two of them, and then we'll sign off. Go ahead.
All right. From Stafford says, John, this is a shocking graph about your poorest residents paying such a high % of taxes relative to the wealthy. Curious, how does Washington state fare relative to nonprofit work, assuming the rich are contributing to the nonprofits?
Read the last part of that again. How does this, when it starts talking about nonprofits, read that again.
Oh, how does Washington state fare relative to nonprofit work, assuming the rich are contributing to the nonprofits?
Okay, so I don't know how, nonprofit and corporation laws here relate elsewhere. If I'm interpreting the question correctly, I think it's getting at the fact that if you tax rich people less, perhaps they'll then be more inclined to take some of their money and donate it to nonprofits. So there may be sort of a compensatory phenomena. I'm not sure that that's the question, but that's sort of how I'm interpreting it. That's probably valid. Again, though, I will argue, there's sort of a famous quote that I agree with, that in matters of taxation, it tends to be best to sort of move towards the national mean. And that's sort of the proposal that I favor. It's not to create some sort of high tax state, just to move us more to the mean. But the impact on nonprofit donations is a fair one, and certainly that perspective needs to be taken into account. Maybe we'll take one more question, Matthew, from the chat room, and then I will look at those and get back to people in the after the call is over. Go ahead.
Sounds good. From Jeannie O'Brien. I know that I am naive in this area, but do other states that have income taxes allow residents to deduct their federal taxes with the amount of state tax?
Yeah, so as I understand it, the policy is uniform across states. That is, it doesn't, we're not discriminated against relative to other states that have the same structure as us. So the real issue is not Washington compared to other states. The real issue is, should we get to deduct our taxes, which I certainly support us being able to. So, all right. I hope that answered the final question. And I will go into the chat room and respond to other questions later. As I said, it's sort of important for me to keep these linked in your minds as a 30-minute sort of way to start a Saturday morning that's interesting, accessible, but that doesn't take up a lot of time. So with that, I'm going to say thank you very much to everybody for joining us. I enjoy preparing for these. I enjoy your questions. Please do feel free to invite your friends and relatives to future sessions. Next Saturday's talk will be on homelessness. So with that, I'm going to say thank you one last time and look forward to seeing everybody next week.
Thank you, John.
Thank you.
Hi, Marie. It's good
Hi,
to
Ann.